Hello there, welcome to another video on investing in stocks. If you want more videos, hit subscribe. Any questions, drop me a comment. So some stocks or companies are just safer than others. They might not give you the best returns, but they're going to give you the most stable returns most likely. And there are some main characteristics about the stock and the company which makes up a safe investment. So these are just some of the observations I've made. So we're going to talk about the stock first, then the business. Of course, the business is the most important thing, but the stock is usually like a reflection of how stable the company has been. So first of all, looking at a stock, you want to see a stable upwards trend with minimal volatility. You might think that's too good to be true. There are plenty of stocks which have not really taken a dip apart from when it's been crashes or corrections, right? When the whole market goes down, every stock follows. So no matter how safe the stock is, it will go down a little bit. But some stocks are just very sort of goes intact with the economy. So that's one thing you want to look for. And if you're a dividend lover, you want to see consistent payouts. So every year or 3 times a year or 4 times a year. And ideally you want to see increasing dividend payouts. So paying a dividend is not something every company can do. And if a company is paying a lot of dividend, it means they have money left over that they can pay out. And if they are increasing their dividend and it's a dividend stock, that probably means they're making more and more money, so they have more and more money to pay out. So you really want to see an increased dividend. And again, some companies have been increasing their dividends for decades. So look for that. It's very easy to look up a dividend payment history of any company, by the way. But of course, just because a company pays dividend doesn't mean it's a safe stock. And just because the stock is safe doesn't mean it has to pay dividend. Now, thirdly, just a bonus is if the stock and the company always comes back right after a crash or a correction, because this means there's a lot of long-term investors which are not going to sell no matter what, and as soon as the stock drops a little bit, people buy back in, which is a very strong sign of confidence in the stock. Besides, if it's a well-run company with a stable management, it will always come back after a crisis, just like the general market and the economy. Now, moving on to the underlying business, which is the most important thing about a stock, is minimal competition and high barrier to entry. So you preferably want it to be a dominant player, so one of the larger players with the biggest infrastructure and a lot of advantages which comes with being on a big scale, and a high barrier to entry. So these could be like selling products in stores and food, beverages, making cars, big industrial equipment, making fighter jets, boats, big stuff where you need a lot of capital to get started. An example of low barrier to entry would be like information technology or social media or apps where you can just come up with a new concept and it can take off immediately, and you can just hire more and more people to sort of keep up with the demand. And looking at the company's balance sheet, which if you're looking for a safe investment, you'll probably be looking at the balance sheet a lot more closely than if you're looking at a growth sort of visionary stock. So so you want low debt, which is obvious, low debt to equity, for example. Now, some companies have a lot of debt just because they can get cheap money and there's low interest rates. So don't read too much into low debt, but in general, you want low debt because that means it's a self-sufficient company. High on cash, so they have a lot of cash stashed away. So in case something happens, no worries. And a hoard of cash is also something they can take from in order to pay the dividend. And you want a lot of free cash flow, which means the company is free cash flow positive. After everything is said and done, they still have a bunch of money left over. And you also want the cash hoard and the free cash flow to continuously increase over time, stable increase. You obviously want a stable management team, so a management team which sort of keeps the same business model, and preferably people that have been around for quite a long time. And as I said, the business model and management is really the most important thing about a company. It's sort of where the company is headed. And if most big investors, long-term investors, want to see the CEO and the business model stay the same, right? Because that's why they're long-term investors. And you want, in my opinion, you want all your investments to be long-term. So this is something you should look closely at. Preferably, you want it to be a very large company. The larger the company, the less fluctuations. And at least 50 billion or more makes it like a really good blue chip stock. And you want it to be an established company, preferably an older company that's been around for a long time. And if it's a big one, it usually means it's not going anywhere. It might stagnate, it might go up and down, but it's not going anywhere. There's no fear of bankruptcy, which is very rare, by the way. You want strong intellectual property, which is the product, which is basically the patents. So it's what the company owns, right? So for Disney, their movie titles are intellectual property. For a video game company, their video games are intellectual property. For Apple, it's the designs, etc., etc. So this is something no one can take away from the company, and that goes for products and services. So basically not just things they own, but also things that are going to be hard to replicate. And just some personal examples. I'm not saying these are the best stocks you should invest in. I'm not recommending them. I'm just giving some examples of companies who sort of ticks all the boxes. Coca-Cola Company, Boeing, Microsoft, Lockheed Martin, JP Morgan, Waste Management, Apple, Pepsi, Johnson & Johnson, Intel Corporation, and Kraft Heinz Company. What you will notice about these stocks are they fulfill a basic need of people. It's like very bread and butter, okay? Coca-Cola, soda. Boeing, airplanes. We'll always need them. Computers, weapons, banking, waste management, smartphones and gadgets. Again, drinks and snacks. Healthcare, pharmaceuticals, chips for running computers, and then food, ketchup, etc. So these are companies that's not going anywhere. There's no way, and it's not like some tiny beverage company is going to come and take a large chunk of Coca-Cola's market share. Okay, so these are just some of my points. What do you look for in a stock? Are you a value sort of dividend investor? If so, what stocks are you looking at? Do you own any of these stocks? Let me know. And yeah, drop a comment, and I'll see you in my next video.